Welcome friends. Asli Bania welcomes you once again. Today we have brought you another multi-bagger stock, that is Pondy Oxides and Chemicals Limited. They are mainly into recycling of lead for batteries. So let's look into it. This is our standard disclaimer. I am not a SEBI registered analyst. Before investing in this stock, please consult your SEBI registered analyst. We will not accept any liability due to your investment in this stock. Now, Pondy Oxides and Chemicals Limited introduction. Pondy Oxides is basically a leading secondary lead smelter in India. Customers basically include battery manufacturers, chemical manufacturers, and PVA extruded and molded products manufacturers. Almost 50% of the company's production is exported to numerous international customers, and basically in South Korea, Japan, Indonesia, Middle East, US, Europe, etc. So the Pondy Oxide Limited basically extracts lead and other metals from scrap batteries, and they have a process where they reuse the same after refining. So they are able to refine the lead to 99.99% purity through their own process. This form of lead is currently being imported in India for manufacturing of batteries. So if we see the Pondy Oxides Limited, it has basically three business segments. One is metals, second one is metal oxide, and third one is plastic additives. Now coming at the financials of Pondy Oxides Limited, if you see over the past 3 4 years, the top line has been growing very good, which is resulting in increase in bottom line as well. So if you see, like in March 2015, the top line was around 373 crore, which almost have become three times in 4 years time. So which is a very good thing. And later in the presentation, we'll also see why the top line is increasing, because it is due to the capacity increase by the Pondy Oxides and Chemicals Limited. Now looking at the standalone financial quarterly financials, so if we see the margins of the company has increased a bit in last 4 5 quarters. So because of that, company is posting a little bit more of bottom line, increased bottom line, and that has resulted in more profits. Now uh, this is the screenshot of latest consolidated results of the company. Now, if you see the screenshot, you will observe that almost 80 to 90% of the cost of revenue is due to cost of raw materials, which is lead. And the other thing which is noticeable is the company equity is quite small. So because of even smaller profit, they are producing a good number of EPS. So if you see the 9 month EPS, it is coming out at 57 rupees. Now coming at cash flow, company shows negative cash flows wherever turnover is increasing. Like in March 2015, the turnover came down, so we see a lot of positive cash flow from operating activity, so which looks a little bit consistent. Now, now coming at the capacity of Pondy Oxides Limited. Basically, the company is continuously increasing lead and metals production capacity. If you see, like last year, the company's capacity was 60,000 metric ton per year, which company gave information in the annual report that they will increase to 72,000 metric ton per year in FY 18 and 19. And the ultimate goal of the company is to increase this capacity to 120,000 metric tons by year 2020-21. So the company's top line has been growing at a CAGR of 36%, which is very good, and the bottom line has been growing at CAGR of 59% for last 3 years. So that is also good, but the only thing is what my gut feeling is like the top line might grow, but we might not grow the bottom line at CAGR of 59%, and it will slightly come down. Now coming at the pros and cons of Pondy Oxides Limited. Now coming to pros, Like company is consistently paying dividends and current dividend yield is 0.92%. That shows that company is generating some cash, and through that cash they are paying the dividends. Although in the cash flows it shows negative cash flow generation due to operating activity due to increased top line. Now the promoter holding in the company is around 47%, which is quite good because of the quite good shareholding in the company. Now, in the batteries, if you see from a general perspective, the consumption has to grow. The consumption is growing very fast, and even due to growth in automobile industries, which has a very good outlook, demand for lead for the next 5 years will continue be in momentum, and uh, the demand will increase. That is why if you see the company is also increasing their manufacturing capacity to 120,000 tons per year in by year 2021. So so the demand of products is there, and company can benefit from this demand scenario. Now there is a con that company has to manage raw material prices. So due to this, company has set up a hedging desk based in London-based broker to basically manage its metal price exposure. Now coming to cons, basically it is a metal sector company, so it is prone to risk of high volatility in metal prices. The company sometimes suffer from inventory loss also, whereas like company has bought some raw material at a higher price and the price drops down, so basically, when the finished product comes in, the final price is a little bit lower, which leads to inventory losses sometimes. Uh, the company is also subject to currency rate fluctuation because it imports a substantial part of its raw material from outside India. So they are also dependent onto dollar INR exchange rate. Now, coming to the final review of Pondy Oxides and Chemicals Limited. So, Pondy Oxides and Chemicals Limited is available at market price of rupees 327, which is at PE of 4.7. Friends, can you believe it? It is at PE of 4.7 and the market cap of 182 crores. Although they are making a sales of around 1,000 crores, so the equity capital of the company is quite low. It is around 5.5 crore, resulting in only 55 lakh shares. Uh, this is an approximate number, and those are held by only 12,000 shareholders. So it is a quite small company from the equity perspective. Now, from my estimate, what I expect is like the revenue expected by year 2020 and 21 is around 1600 crores, and net profit after tax shall be around 65 crores, and the EPS should be around 117. So my final verdict. So Pondy Oxides and Chemicals Limited is at very interesting valuation. So minimum price what I expect in three years time is around 11 rupees 1170 based on a PE of 10, and this can be an approximate 3x opportunity from 3 years perspective. What I believe is this is a median risk stock, and probability of price fall is low unless there is a high volatility in raw material prices leading to inventory losses. So risk is low if there is no volatility, and risk is high if there is volatility in raw material prices of lead. So you can very well understand the risk perspective in this stock. Okay. So thank you friends. If you liked my presentation, you can subscribe to my channel by clicking on the link below the blue colored arrow. Thank you and see you next time. Bye bye.